Hi everyone, my name is Simon Mishevich from Optimize. I'm going to be talking about this spreadsheet, which is all about the use of VAT, in particular for people with service accommodation or indeed holiday lets. So if you click onto this button, you'll be able to go into this video, should you ever want to. A couple of things is that this is for educational purposes only. If you need specific tax advice, please speak with your accountant stroke tax advisor to make sure that you are carrying out the right strategy. A couple of things for you is that anything with a blue cell, you should be entering details. Any blank cells should be left alone because they are read only. So what you'll end up doing is trying to understand whether you should use a VAT flat rate or not, and this is particularly useful for property investors that have service accommodation, holiday lets or indeed commercial properties. And so what we're going to do is we've got the flat rate scheme, and the flat rate scheme actually is 10.5% for the holiday let scheme. So you can enter that information in there. We do have details about flat rates, which you can then click onto one of these links down below and get access to that. A couple of things you can do then is say, well, we need to enter some information here to understand whether the VAT flat rate scheme works for you or not. And what you're looking is, for this particular example, is entering details of your rent that is going to be 20% VAT chargeable. And this is 20% not taken into account, by the way. So if you get rental income of £80,000 in a particular month, then you will have a £16,000 VAT that you will need to charge on top of that £80,000. Now you may have 0% VAT. I'm not going to worry about that too much, but you may have some rental income as well mixed in with your property investing strategy for holiday lets, and I would say that you probably should be looking to split that out, so to keep your holiday lets and indeed your rental accommodation totally separated. But let's assume that you have indeed got £15,000 worth of income from your rental residential properties. Now, what I'm going to do as well is just enter some details. This again is we've got purchases exclusive VAT. So let's assume that you've got running costs, you've got cleaners coming in, and they might charge you X amount of money. And let's assume that they charge you $4,500. Now, you will have exempt, which is mortgage interest from your mortgages. You may have rent to rent, so you may have other people charging you rent for that property. So let's imagine that you've got £20,000 worth of cost there as well. You may have additional costs such as letting agency fees, booking agency fees, etc. So on top of that's £4,500. Let's put in there an extra £3,000. And what we're trying to do is establish here the profitability of your business in one guise, but the main focus here is to understand the VAT consequences. And what this spreadsheet will do for you is on line 27, as I'm highlighting here, it will tell you the output VAT that would normally be charged or be paid to HMRC, and then you have got the input VAT that could be claimed on the purchases, bearing in mind that that 1263 is different to the 1500, and that is because you've got partial exempt sales, residential property being one of them. So it tells you the net VAT that you would be passing on to HMRC, but if you use a flat rate scheme, all you would be paying is £11,655, which is a 10.5% of the total value here. So that's the 95,000 plus 16,000 for VAT flat rate purposes. So in this regard, what it's saying is the difference between the VAT between standard method and flat rate is £3,000. So you could be saving £3,000 here by using the VAT flat rate. So you would pocket that money, and that would then go into your accounts as a saving. So conclusion, you are better off to go onto the flat rate scheme, as it says there. And it also says, well, you've got some partial VAT that you weren't able to claim because of the residential rent. However, What it does say here, it does an automatic calculation, and it says don't claim value above may still be claimed under the de minimis rules. So you are allowed to claim £625 of exempt VAT, that was in previous calculation up here, even though it suggests that you can't. Don't forget, if you are interested in more details, then you can click on these links down below and it will take you to our articles, which is all about flat rate for holiday lets and service accommodation. And going back to the other spreadsheet, there's also another article called VAT Basics for Property Investors, which you can click onto and hopefully get some useful information from those too. Thanks for listening.